And we are live. It is 3 o'clock. Today is March 20th. Today is Friday, March 20th. Getting ready to get started in one brief second. My name is Travis Witherspoon. I'm getting ready to show myself on the screen. Thank you for visiting. If you do not know who I am the CEO of Carter Cow Capital. This is Carter Cow Capital's webinar for how to be able to make passive income. This is something that we end up doing, something we end up talking about for one of our fundamental courses, and being able to teach each and every person how to be able to do that. And we teach through education and automation. So what we end up doing is we actually have our manual trading strategies, and this is one of our fundamental strategies that we end up talking about from day one for a person that's new compared to a person that is that is had more experience and everything else like that. And then we have automation services, which means that we basically we have our own code, we have our own systems that allow people to be able to trade through automated systems. But thank you for logging into this page. I'm going to end up talking to you for right around an hour or so. If you would, please make sure that you end up signing in and make sure that you end up writing your name down so you can be able to hear so I can make sure that you can be able to hear me. I'm getting ready to type in, please write your name so you can be able to go through that. And then after that, we're going to get started promptly right around 3:05, just so I can make sure that everyone is inside. So as we're going in this, please make sure that you end up writing your name. Tell me that my sound is good. And then after that, we'll go ahead and get started in a few minutes. Okay, so once again, please make sure that you end up writing your name down. Please tell me that if my sound is good. We'll go ahead and get started in a few minutes. I'm very excited to be able to talk to each and every person that's out that's joining into the classroom today. Going to end up going through a lot of good stuff today. Very excited to be able to go through some of the things. I'm getting ready to show myself on the screen once again. That should be showing up actually in a bit. There we go. This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. Very excited to be able to talk to each and every person that's inside of the chat room. If you're watching this from the broadcast room inside of the actual website, what you can be able to do is actually click on continue basically with the messenger, and from the messenger you can be able to message me and I'll be able to answer your questions from there. If you're just watching this just based off of Facebook or just based off of YouTube, then you can be able to go to that link and be able to speak to me as well through that actual link. So there's a few ways that you can be able to communicate. I'm actually going through and making sure that my notifications and everything else are good from my side from Facebook. So if you do have some questions and you do want to check in that way, you can be able to do it that way as well. But I think probably it'll be a little bit easier if everybody goes through and takes a look at the actual YouTube link and actually be able to go through it that way. But like I said, please make sure that you end up typing in your name. Tell me if my sound is good. Tell me if I need to turn my volume up or turn it down. And we'll go ahead and get started promptly in about 2 minutes. And for the people that are out there, actually do me a favor, write down what's your overall trading experience as well. Or if you are a beginning trader, you've been a guy that's been trading for a while, would like to be able to know that as well. Kind of allows me to be able to kind of allow the conversations that we're going to end up having to be able to work a little bit better with that, because it's a I want to be able to make this a little bit more personable with everything that we end up having going on. So with that being said, let's go ahead and get started rocking. Okay, so we're gonna go ahead and go through the disclaimer real quick. I am not a CPA. What that means is I do not tell people whether this buy or sell. That's not my game. What we end up doing is we actually end up teaching education for people to be able to understand the market, be able to trade in the market, be able to survive in the market, and do it to be able to make passive income over and over again throughout months and allow that compound interest to be able to grow your overall account. Now, anything that we end up doing and anything that we're talking about is hypothetical unless it's previously been done, and we actually end up showing exactly how we end up getting that done. But everything involves risk. So understand that if you end up making a trade based off of anything that we end up talking inside of this classroom or anything else like that, just based off your overall own merit. Please type in a wire, yes, that makes sense. If that does, so we can go ahead and move on and go from there and jump right into what we're going to end up talking about. But first, let me introduce myself. Once again, my name is Travis Witherspoon. I am the creator of Pathfinder Auto, the Precision Entry Point Trading System, and I am a Forex Trading Specialist, which means that what I end up doing is helping beginning traders and traders that are looking to be able to find their edge into being able to guide them on the way of their overall trading with our overall services, with our overall mentorship and overall style of trading. So very excited to be able to talk to each and everybody about what we're going to talk about with our Fibonacci Fundamentals and actually be able to go through there. But I asked everybody before we actually end up getting started to, one, write down your name, tell me if my sound was good, but also I wanted to, in the email that I sent you, I end up sending you a book called Success in Forex. If you did not receive that book, I'm going to end up writing it down. I'm going to end up placing in the website here as we're talking right now, so I can make sure everybody has that copy. That is my free copy to you because you end up signing into this. I do appreciate each and every person hopping inside of this this webinar. So that is my free gift to you. But for the people that end up reading that, I want to make sure that you end up getting a lot out of what we're going to end up talking about. So understand this. With everything that's going on in the world, with everybody self-quarantining, with all of the things that are going on in the outside world, the time is now to invest in yourself. And I'm going to stress that while we're actually going through this, because if you invest in yourself, then you can be able to figure out and find opportunities when people are fearful. All right. The people that are fearless in the market right now are the people that are going to end up making their overall wealth within this time. Now, there's a lot of people that end up making their wealth within the 2008 crisis. They end up happening with the market. And if I was in your shoes during that time, because I was actually still in high school at that particular point, but if I was a person at that particular time knowing that the real estate crisis ended up happening and knowing the stuff that I know right now, then I probably would have invested in real estate. If we look at the market right now as we speak, it's going into all-time highs and all-time lows in certain positions. So the time is now to invest in yourself so you can be able to understand and be able to attack that opportunity. Now, if you can be able to do that over and over again, then it gives you a chance to be able to create generational wealth, passive income, and a chance to be able to have a skill that no one can be able to take away from you. Now, do me a favor. With your overall mindset about what you're going to end up learning inside of this classroom, everyone has a goal. So what I want you to do is write down your vision, and then after that, let's figure out how we can be able to make that a plan. All right. Now, remember, I end up talking about that I offer mentorship. My mentorship is being able to make sure that you understand everything about the market, but also being able to get you away from the pitfalls in the market that can possibly end up happening. So if you can be able to understand what your overall goal and what your why is before we end up going into this, then it makes it a little bit easier for you to be able to understand that this is the reason why you're trading, especially when you end up having those downturns. And everybody has a downturn sometimes when you're actually trading. All right. Now, once you end up knowing what your plan is, when you end up understanding what your why is, in order to achieve any type of greatness, you have to first believe that you can. All right. You have to believe that you can be able to do it. If you don't believe that you can actually be able to do it, then you can go ahead and just walk outside and get off of this webinar, and we can be able to move on. All right. Confidence is probably the most important thing inside of trading. because there will be times where you end up losing. There will be times where you end up winning big, but you have to be able to control your emotions, but you have to be able to have confidence that you can be able to pull that trigger off and make that next trade, even when you're seeing some drawdown. Now, once you end up understanding what you want, understanding how you want to get it, and understand why you want to get it, you need to speak it. You need to activate the work, and then watch the work actually ends up happening. All right, you activate the work, and you sit up there and do it. You can achieve anything that you end up working for. All right, so let's talk about what is Forex, because inside of this chat, I still haven't seen that many people end up basically telling me what their overall experience was, but by actually going through it and just talking in general, I'm going to treat it like each and every person is at the beginning stages of their overall trading. Okay, so I'm just going to treat it like no one has ever traded before, and we actually end up going through it that way. I think that'll make it a little bit easier. So Forex is short for foreign exchange market. Now, unlike the stock market where you own a stock or a bond or own a share of the company, you're evaluating the relative value of one currency to each other, which means that what you're doing is that you're looking at one currency's strength versus the weakness of another currency, and then after that, you're going to end up trading based off of that. Now, once you end up doing that, as long as the market ends up going your way, then you actually end up making some cash and being able to do that. Now, if it goes against you, then obviously you end up losing money. But basically, you're speculating on one currency being stronger than another one. Now, let's talk about some market information. Now, the foreign exchange market is the most actively traded market in the world, averaging more than $5 trillion being traded on an everyday basis. Now, by comparison, this volume exceeds the global equities trading by 25 times. All right. So what this means is this. If you decide that you're going to end up buying right now, there will be a seller. All right. In order for you to be able to buy, there has to be a seller. In order for you to be able to make profit, there has to be people that are basically trading against you in a way that allows the market to be able to move. And because this market has so much money that's actually driven into the market, you can be able to see large swings in the market that can be able to happen. Now, our overall job is to be able to make sure that we can be able to do it safely in bringing in income. So let's talk about the competitors that you're going into when it comes down to trading again. Understand this. You're going to end up trading against a lot of different people. So you got to understand that the overall goal of being able to do that is being able to trade with the popular people. Now, this includes the banks, the central banks, hedge fund managers, corporations, and individual investors. Now, the reason why I personally trade Forex compared to any other type of trading that you can be able to do for its futures or for its stocks, for its bonds, or anything else like that, cryptocurrency, is that the market is 24/5, which means that the market is open 24 hours out of the day, 5 days out of the week, where it opens up on Sunday at 5 p.m., then after that closes on Friday at 5 p.m., in which the market can close in the next 2 hours. But there's 3 sessions that I end up primarily trading. And what this does is, if you are a trader that or somebody that basically doesn't have that much time throughout the day because of your overall job, you can be able to trade in any other session and still be able to place in and find good opportunities. The Asian session ranges from 5 p.m. to 6 a.m. The European session ranges from 2 a.m. to 11 a.m. Eastern Standard Time, and the U.S. session ranges from 8 a.m. to 5 p.m. Eastern Standard Time. So it's always there's always a good session. There's always a good time to be able to find some types of trades. Now, understand this: Forex is a win or learn business. Now, understand, I did not say lose. Right? I did not say lose. There were some trades that I ended up having this week that I actually ended up learning on. But there was some trades that I actually ended up doing very well on. We're actually going to end up talking about them as well. And our students have done very well on them. I'm going to end up talking about them as well. In order to be able to win in this business, you have to be able to understand people, and you have to take away emotion. You need to have a simple yet repeatable way of trading. So in times of crisis, in times of where the market is basically being hectic, if you have that same style of trading, if you trade emotion, not with your emotions, and basically end up trading based off of what you have been taught to be able to do, then you're going to be better off. Now, Um, the market can only move in two different ways, and understand this: there's bulls and bears. Bulls want to make the market move in an uptrend where you're getting higher highs and higher lows, and bears want to make the market move in a downtrend where you have lower lows and lower highs. All right. So, with that being said, understand this: there's no guarantees in trading. The sooner that you accept that, the sooner that you can release your expectations and focus unconditionally on a proven process. Now, the rest of this time, we're going to be focusing in on the Fibonacci Fundamentals course. Now, if you end up hopping in and watching the video that I end up placing on the link where we end up talking about a trade ranking system, I'm going to dive into that a little bit more so you can be able to understand it. If you did not, please make sure that you end up going to the link, cartercowcapital.com/start here, and be able to look at that video, because both of these videos together are basically two different webinars to allow you to be able to understand how we trade with our Fibonacci fundamental system. Now, why is the Fibonacci sequence, why Fibonacci trading is so much of a proven process? Well, it's broken down into 4 different sections. It has research-driven analysis. The Fibonacci sequence has been recognized since 1202. Now, understand this: it's 2020, and people are still using the Fibonacci sequence and the way, in a way to be able to trade. It's used outside of Forex trading. Scientists have discovered the Fibonacci sequence to be used in nature. You can see it in pine cones. You can see it in pineapples. You see it in art. You see it in people in the way that they end up creating music, right? And obviously, it's used in trading. It is simple and repeatable. The Fibonacci trading in general can be used in any market without any type of adjustment. And it's a profit generator, which means that you can be able to find pinpoint entry and exit areas, which leads to consistent trading. And consistent trading leads to consistent profits. And that's the reason why you're here in the first place. You want to be able to create consistent profits. Now, what we're going to end up doing is breaking down this overall webinar in 4 different areas. We're going to talk about the history. We're going to talk about the ratios in general, how they relate to retracements and extensions. And then after that, we're going to talk about our trading strategy briefly. And then after that, we're going to end up talking about my team, because understand this, I want to make sure that while we're going through this, you understand that this is a community. And what we're trying to do is build a community of traders so we can be able to fellowship together and also be able to learn and profit together. So everything starts with this guy right here, Leonardo da Pisa da Fibonacci. He was the son of an Italian businessman that grew in the city of Pisa, and basically his father was a merchant. And what he ended up using Leonardo for was he ended up having him keep up with the arithmetic to keep track of their commercial transactions. Now, he ended up finding out the Fibonacci sequence sort of by accident when he was basically holding rabbits, and he could end up seeing what was going on with the breeding of the rabbits. So he would put 2 rabbits in 1 month, and then after that he'll open up and he ended up seeing that there was some more rabbits that actually ended up going through. So he ended up doing this by month sequence, and ended up figuring out this sequence of numbers that actually end up happening. But it involves adding the 2 preceding terms to one another to generate the next term. Now, you don't understand what I mean by that. Let's look at these numbers and I'll go through it real quick. We can see 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233. Now, for the people out there that are basically looking at on the top chat and everything else like that, tell me, what's the next number? Take a shot. What is the next number? People looking at it in the broadcast room, type it in. Tell me what you think the next number is. Okay, we got one person that got it right in the Facebook chat. All right, cool. You end up guessing 377, then you are correct. Now, the way that you end up getting that was by doing this. If you look at the preceding terms, you end up adding them to the next one, and you end up getting it. So 0 plus 1 is 1. 1 plus 1 is 2. 1 plus 2 is 3. 2 plus 3 is 5. 3 plus 5 is 8. 5 plus 8 is 13. 8 plus 13 is 21. 13 plus 21 is 34. 21 plus 34 is 55. So the reason why people end up getting 277 is that they end up adding 144 plus 233 to be able to get 377. Now, Based off of these numbers, what traders end up doing was they actually end up breaking these down into actual ratios. Now, the ratios are important because in the movement of an ABCD sequence, you can be able to find the potential U-turn areas where you can be able to figure out where prices could potentially go. Now, these most common ratios that are used is the 23.6, the 38.2, the 61.8, and the 78.6. Now, we end up giving these names to allow everyone to be able to understand them, be able to speak the same language when we're actually going through it. But what these do is represent how much of a prior move has happened or corrected or retraced in the market. Now, typically, well, all of these numbers are found by using the Fibonacci sequence and basically dividing them to each other. Now, everything starts off with this ratio first, though. It's the 1.618, or also known as the golden ratio. The inverse of it is 618, so just understand that in general. Now, the way that you end up finding the golden ratio is by dividing the previous number in the sequence. Now, let's take a look at this example from right here. If you end up looking at it, let's start off with 233 divided by 144. You get 1.61805. Then 377 divided by 233, 1.618. 610 divided by 377, 1.618. 1597 divided by 987, 1.618. And you keep on looking at that chart, you see that number is very prevalent. Now understand this. This is not by accident. All right, that number is not by accident. That number is being used concurrently over and over again. Now, the next percentage that you end up using, or the next percentage that we end up looking at, is the 78.6. So it's also known as the value trade. Now, the value trade is derived by multiplying the golden ratio by itself. So you multiply 0.618 by 0.618, you get 0.786. Now, the reason why this is known as the value trade is because the 78.6 level gives a low risk to high reward probability trade. Now, understand this. Anytime that you're trading, for the people that have not traded before, and anytime that you are trading in from this point on, especially if you're trading with us, you got to understand that you're trying to do this by risking as little money as possible to be able to make as much money as possible, right? And I think that's very simple to be able to understand, but sometimes it's very hard to be able to spot out. And that's what we're going to end up talking about today. That's what we end up talking about in the trade ranking class as well. Now, from there, the 38.2 is also known as the safe haven. Now, the safe haven is a ratio that is divided by, in the Fibonacci sequence, two places to the right of the number. So to give you an example, you look at 55 divided by 144, you get 0.3819. And you end up dividing 89 divided by 233, you get 0.3819, right? Now, the reason why the 38.2 is also known as the safe haven is because in times where the market is basically retracing, the market is very healthy as long as the market passes the 38.2 level. Now, if the market does not pass the 38.2 level, then it's considered to be unhealthy, and typically you end up finding a lot of resistance once it ends up breaking the B low, and we're actually getting to that a little bit more. Now, if it does not pass the 38.2, then that means that more than likely it will pass or get somewhere close to the 23.6, which is also known as the short. Now, the 23.6 is a ratio derived by dividing a number in the Fibonacci sequence three places to the right, which means that if you look at 8 divided by 34, you get 0.2352, and 89 divided by 377, you get 0.2360. Now, the reason why that's called the short is because that typically when you end up having a short movement, once again, you'll end up seeing some type of resistance that'll end up happening before the market actually ends up fulfilling this overall extension. Speaking of that, let's talk about retracements and extensions. Now, before I end up moving on, please type in a why yes that makes sense. If you have any questions, this would be a great time to be able to ask them, and we'll go ahead and move forward while we're going through this, so you can be able to understand completely what we're talking about. If you're just hopping on, once again, thank you for hopping on. We're actually going through Fibonacci Fundamentals. Actually kick off our webinar, actual join. So if you are new, please make sure that you end up typing into the chat box and saying hello. Tell me if my sound is good. Tell me where you're from, and we'll keep on with the communication while we're going through that. We'll move on from there. All right, so let's go ahead and talk about retracements and extensions. Now, I'm getting a spinning wheel, so you would just click on live, then you should be able to get back into the overall broadcast point from where we're at. Okay, there we go. We should be good to go from there. All right, so retracements. Apply levels of percentages of a pullback when between the support and resistance of the AB boundary. Remember, everything starts and ends with ABCDs. If you're not familiar with ABCDs, I will link on the video where we talk about the ABCDs of trading inside of this video, or inside of a link, so you can be able to watch it and be able to understand that fully while we're actually going through it. Now, the extensions are levels that forecast what a price is going to end up going or projecting once it breaks the AB boundary. Now, these three levels include the 118%, the 127%, and the 161.8%. So, to give you an example of what we're actually talking about with that, if you looked at it, each retracement level has a high probability extension, and it forecasts to the D extension. So the way that we end up kind of summing this up very simply is that if the market ends up retracing to a green level, then it's going to end up extending to a green level after it U-turns and goes up to its overall extension. Now, does it go there all in one move all the time? Not necessarily. But there's a very good chance that the market will complete its D extension, or the market will complete its D extension at that green level that it matches up with. Same thing with the gold level. Market retraces to the gold level, then it extends out to the gold level. The market retraces to the red level, it extends out to the red level. So if you're looking at these overall percentages that we end up talking about, the 382, the 5, the 618, the 23.6, those all extend up to the 161.8%. The 78.6, or the value trade, extends up to the 127%. The deep retracement, or the 8-6 position, basically retraces, or basically extends out to the 118%. All right, so when you're looking at that, you have an ABCD trend, and okay, there we go. You end up having an ABCD trend. Now, in an ABCD trend, if you're not familiar with it, what ends up happening is that from an A to a B, in an uptrend, you end up having what is called a rally. So that means that people end up buying it at a low price. The market ends up going up, and then after that, they end up taking profit by selling. And from that position, it ends up giving you a very high price from there. So the highest price of the B will end up being the top of that, will end up being the top of the resistance. The lowest price will end up being the support. Now from there, it creates a boundary. Now, as long as the market does not retrace past the A in this movement, then the market will end up having a better chance, or a higher probability, of going and creating a new high. But from that U-turn position, that B to C movement is known as the retracement. From the C to the D is basically your overall extension. Now, how do we use this to be able to figure out where the market is going to end up going? We'll actually end up talking about that in a brief second. But let's take a look at a downtrend, right? The difference between an AB boundary and an uptrend and a downtrend is basically the name. From an A to a B, people were selling, then they end up buying back at a lower price. That A to B is known as a drop. Then the market ends up retracing to the B to C, and then after that makes a new low from the C to the D extension. Now remember, as long as the market does not go past the A, then there's a high percentage chance that the market will end up moving towards the overall D extension. Now, from there, let's take a look at an example, and just on an uptrend example. Let's say that in this case, the market ended up rallying from 71.57 to 77.46, creating an AB boundary. Then it retraced to the 61.8 level at 73.82. Now, we erase everything from the right side of this chart and not even look at it from there. Based off of what we just talked about from 2 slides ago, the market ended up retracing to the green level. and did not go beyond the green level, or did not go and hit the gold level at this point. So if the market retraces to the green level, then more than likely it's going to extend to what level? All right. Pop quiz. I just want to see if everybody's been paying attention. The market retraces to the green level, then that means that it's going to extend out to what level? Okay, you end up writing green, then that's good. It's going to extend out to the 1.618. Good, 1.618. Good. Okay, and I'm seeing the people on Facebook are basically answering all the questions from there. Good. So, with that being said, if we were to buy this at 73.82, then what that means is that we can automatically place our stop and know where our extension is going to end up being, and know where our entry is going to end up being, all in one different area. From there, it allows us to be able to say, hey, we're going to place in this position, and we're going to be patient and allow the market to be able to move to its overall D extension and allow this to be able to trade, and we can be able to do whatever that we need to do and manage it from there. Now, if we end up doing a very good job, then that means that we can be able to make a lot of pips false to this movement. Now, let me answer this question for you. If we look at from the C to D movement, that was 728 pips from that overall movement. Now, if you're not familiar with pips, what pips actually means is that it's basically a price interest point. And if we're kind of summing this down, the lowest denominator of a dollar is a penny. There's 100 pennies in a dollar. So anytime that it moves up 1 penny, then it moves up 1 pip. If you end up making based off of the leverage that you end up placing in on each trade, let's say you end up going based off of 1 mini lot at this point, or $1 a pip, then you would have made $728. Now, if you end up having a little bit more money in your account, you end up trading with a little bit more leverage, and you end up doing it based off of one standard lot, in this case that's $10 a pip, then that would have been $7,280 off of one trade. Now, the reason why I end up saying that this is a passive income driver is because you only clicked on it one time. You clicked on it, you left, you let the market be able to do what it does. If you lost money, then you lost money. But if you end up making a lot of money, then that meant that all you had to do based off of one click, based off of maybe 30 to 90 minutes of overall work and being able to look at the charts, you was able to grab a lot of money and have a lot of money go inside of your account, especially if you end up getting into the best position. Now, to me, that's very powerful, right? For some people, they have to be able to work a lot of hours to be able to make $728. All you had to do with this, get the education, then click on a button, then allow the market to be able to move based off your overall education. Now, let's take a look at a downtrend example. The market dropped from 80.51 to 79.66, creating a AB boundary again. Then it retraced up to the 78.6 level at 80.33. Then it extended the drop from the value trade area, and then that led to the 127%. So gold went to gold in this particular point. Now, let's think about this. Remember, the reason why we call this area the value trade is because we're risking very little to be able to make a lot. So let's think about this. Our risk will end up being from the gold level to the A. That's it, right? Our reward will end up being from gold to gold. We can see that the market ended up moving down for about 11 days. And then after that, on this candlestick right here, end up hitting that overall D extension, then automatically turning back around. Now, remember, I end up saying that the market gives you a lot of pinpoint entry and exit areas. There's no more pinpoint area, as this market ended up hitting 77.33, and then after that, automatically retracing back down. So that's the power of being able to use Fibonacci trading in general. Now, let's talk about our overall trading strategy. And obviously, the reason why you're here, the reason why you're looking at this is that you're interested in being able to learn what our trading strategy is going to be able to deliver. So let's talk about what exactly it's going to end up offering. What you end up learning is how to accurately plot Fibonacci retracements and extensions on charts to determine the trading zone and style of trading that is necessary to safely maximize profits by minimizing losses in our overall trading strategy. Now, what you'll end up learning by using this overall strategy is a breakdown of our overall strategy, which means that you end up getting a PDF, you end up getting in video form of about 11 different chapters on what you can be able to learn from and what you need to be able to look for by being able to trade on this actual strategy. You also end up getting a PDF copy that will be updated daily of our on a copy of our ranking system, in which, once again, if you took a look at that video before we actually end up getting started inside of this webinar, you know exactly what we're talking about and how we end up looking at our tier rankings and being able to eliminate some trades that are necessarily not in position to be able to take at that particular point. Also, you end up receiving 2 months of overall mentorship, which is 16 classes that we end up having. So it's basically 2 times out of the week. And we end up having them personalized to be able to make sure that you can maximize your overall education and maximize your overall growth inside of your account. And then after that, you end up getting discounts on your overall future projects and going from there. Now, let me ask you this question before I move on to this next slide. Matter of fact, let me move on to the next slide real quick, and then I ask you the question from there. The package option that we end up having for is our discounted on our new project is the Synergy Automated Trading System, and we're actually getting ready to roll this out by the end of this month, being able to talk about the overall trading style on this one. What the Synergy Auto system does is it is a swing trader that basically ends up finding pinpoint entry and exit areas in overbought and oversold areas by using our overall stochastic optimizer for each and every individual currency pair. So that means that each and every system or each and every currency pair has its own optimized file to allow you to be able to maximize the most profit out of that currency pair by itself. What you end up receiving in this demo is one fully optimized set file, and from that one you can be able to see the power of this overall synergy system. I know the last one that we ended up giving out with the Euro USD, basically it started out with $1,000 in our overall account, and I actually ended up turning that into almost $3,000. And Lord knows where the market is right now. I got to take a look at it a little bit later on, because we actually ended up spotting a huge move in the market over the course of the last 12 days. We actually ended up getting into that a little bit later on. But based off of that, going out to all the stuff that we're going to end up talking about, everything that we just talked about has a $799 value. That includes the PDF, the webinars, that includes the mentorship for 2 months, the ranking system, and being able to get the demo. All of that stuff has been broken down, and we're going to end up doing it for a limited time offer of $499, which means that you end up getting the course. You wouldn't get the demo. If you want the full demo, then that'd be the full $799 value, but you end up getting all of that stuff for basically $500. If you break that down into 2 months, that's literally $250 a month with mentorship and overall training to be able to make sure that you end up maximizing your overall time in the market. So the question I'm going to end up asking you is, are you willing, are you not fearful to bank on yourself, to invest in yourself right now in this market where everyone is basically being fearful? Are you going to be the person that's going to end up being fearless and being able to capitalize in this market where giving you that opportunity to be able to make a massive amount of money in a small amount of time? Now, let's talk about, I want to be able to connect with you anyway. And I want to be able to connect with anyone that wants to be able to get started. If you're interested in being able to purchase now, and let's say, yes, this is me, I want to be able to get started. I want to be able to learn your system. I want to be able to go ahead and start making passive income. All you have to do is go to cartercowcapital.com/Fibonacci Fundamentals, and you can go ahead and get started from there. There's a payment system to where you can be able to do it. Everything is through PayPal, and you can be able to pay from the overall system and make sure all of the stuff is good. Now, I still want everyone to be able to connect with us. And here's our 4 different links that we end up doing. This is not including TradingView and some of the other pages that we have, but you go to facebook.com/CarterCowCapital Inc. You can go to on Twitter at CarterCowCap, or YouTube CarterCowCapital, and on Instagram CarterCowCapital. We're basically on them pages. We actually talk somewhat actively a little bit more on Facebook because of our Academy class. And our Academy courses are going very strong. Right now, at this particular point, we have over 100, or right at 150 people inside of our overall group, inside of our overall community. We're really trying to be able to grow that to almost 300 to 400 over the course of the next 2 to 3 months. And I'm very excited to be able to get more people on board to be able to learn through that overall academy, because that's what it's all about. Once again, we're trying to create a fellowship of people to be able to work, profit, and be able to join together to be able to make overall income. So excited to be able to talk about that. Now, moving forward, I want to talk about my team real quick. I want to talk about the people that actually ended up getting started with us last month, because overall, I mean, at the end of the day, we're really trying to, I understand that you're doing this as an investment. I understand that I'm doing this to be able to build a community, but you're really trying to do this to be able to create income. And let's talk about some of the trades that we actually ended up taking as a team earlier this month. About 2 weeks ago, on the 9th, we ended up taking a trade on the Australian dollar, United States dollar, and on the 11th. We actually ended up making 252 pips once they ended up hitting the D extension, which led to $126 for its overall profit. I was very excited about that. Now, if I would have stayed in the market and knew exactly what was going on with the monthly and knew that how the market was basically pushing the market down so much, and would have stayed into it, if we would have anticipated that a little bit more, that probably would have been over 600 pips. But at the end of the day, $126 of overall profit by clicking onto it is not a bad job just on one overall trade. Then after that, we end up going into the pound United States dollar. We sold this on 227. I'm actually more excited about this overall trade that we end up taking than any other one. And I know that some people are looking at it and saying that, hey, well, you only made 27 pips compared to 252. Why are you excited about this one a little bit more? Well, in our system, what we actually end up talking about is how to be able to protect profits in times where the market is basically U-turning. We actually end up catching this where we was over 100 pips on this overall movement, and then after that, it started to slowly start to turn back around on us, and we wasn't necessarily in the greatest position. If we would have stayed in that market, we probably would end up getting kicked out of it. So in our system, what we end up doing is talking about how to be able to manage your money, how to be able to manage profits, and how to be able to manage when the market is getting away from you. And we was actually still able to make a substantial profit just based off of that overall move. Now, I want to talk about this one trade, and this is one of those trades that it's more like the trade of the year for us. We ended up getting into the euro US dollar earlier this week. We actually ended up taking a trade on the 8th, I believe. The market we actually ended up selling it on the 9th. From this point in time, when we ended up taking this picture, we was up 268 pips to 1350. We ended up projecting that the market was going to end up moving 1350 pips on this overall movement. Now, obviously, what we end up thinking that it was going to end up doing is trading and getting down there and taking a little while to be able to get there. At this particular point, the last time I ended up checking on it, on the second picture that I ended up having, we was up 450 pips out to 350. I'm looking at the charts right now. We're up 750 pips out of that $350. 350. Now, once again, if you end up doing that worth $1 a pip, right? In this one, we actually end up trading this based off of a very small account. But if we end up doing this based off $1 a pip, you would be up $750 or $1,350 off of this movement. Understand this: this one trade in general can pay you and be able to pay off this course. All right, I want to be very serious about that. I want you to fully understand that you can be able to make your winnings in one trade, right? You can be able to change your life in one trade, but you have to be able to have the education to be able to do so, right? Now, quick question. Are you going to be the next person to take advantage of this opportunity? Or are you going to be the person to find a way to make an excuse on why you don't deserve to be able to make extra money? Right? There are two people inside of this classroom. There are people that are fully engaged. There are people that really want to be able to go. There are people that want to be able to make money right now. Right? They understand the severity of this moment. You don't get many moments like this in time where you can be able to capitalize on a market. And then there's other people that can end up being skeptics, and they're going to end up saying all of the stuff that I end up seeing is good, but insert your excuse there. Don't be that guy. Don't be that person, right? Don't be that person. All right. Now, I want to talk about one other trade that we end up taking, where my team end up trading, and this comes back to education and being able to go through it. We looked at the U.S. CAD, and I was at a point where I was just like, hey, well, it ended up breaking resistance, and we only wanted to go after the D extension. We ended up hitting this point, but I thought it wasn't in the greatest position to be able to get in. And understand this. I end up having to talk, my students end up saying, hey, this is the time to be able to trade on this actual market. This is the time to be able to go after it. So they actually end up convincing me on being able to take this trade. We end up buying it on February 24th. We actually ended up making 112 pips off of this overall movement, but the market ended up rallying up almost 656 pips from this overall extension from the last time I ended up looking at it. So by being able to teach and people something that was simple and repeatable, they was even able to, based off a community, and be able to place us into better spots because some people looked at it in a different way. And I want to be able to talk about this because our overall community is built off of being able to have great fellowship, being able to have great conversations, and being able to make sure that I send you messages like this. And you look at these messages, we end up talking about over the month. We ended up getting in a pound US trade that was up 73 pips at the point in time. We were going out to 121 pips. That was the one where it actually ended up turning around on us. And we was able to make a profit based off of that movement that went back, right? We was up 353 pips for the overall month, but we ended up hitting the US CAD, I want to say a few hours after that, right? And you look at the person ended up talking to me. I'm like, yeah, I told you need to be aggressive. But he was doing that based off of the overall education and trading that we ended up talking about. And if you look at this one on the right-hand side, we were talking about the Euro-US trade that we ended up taking on March 9th. And I was like, I hope you end up placing your order in. At that point in time, we were talking about how we was up 250 pips. Now, you should see the messages that I ended up telling him when we're up 700 pips off of this overall movement. I want you to be the next person to receive a message like this, right? I want you to be a person that ends up seeing this in your overall bank account and saying that you end up making 793 pips in February alone based off of some of the things that we end up talking about, right? Understand that the class cost, if you want everything inside of the package, that's $799. If you don't even want the demo packaging, you just wanted the system, just the education alone, that's $499. So you just paid off the overall class, made money in your pocket, and you end up doing it based off of a series of trades. Now, this offer is going to end up remaining the same until seats are fully closed up. Now, I personally want to be able to do 30 people inside of the seats, 30 people inside of the classroom at one time, and being able to go from there. I found out that's my sweet spot when it comes down to teaching people. Now, the purchase link, once again, is at cartercowcapital.com/Fibonacci Fundamentals. I urge you, if you're willing to take a chance on yourself and you want to be able to learn about overall trading, this is the time to be able to do so. This is the time to be able to invest in yourself. Don't leave from this overall situation where you're being at home, where you can be able to learn, where you happen to go through everything else like that, and you don't take advantage of the overall market. Now, I do appreciate each and every person staying with me throughout this overall time. We actually end up getting done in 48 minutes. Typically, I say we end up getting done in 50 minutes for this overall time. But even still, I had a blast being able to talk to each and every one of y'all. The people that was over in the Facebook community ended up doing a very good job in asking questions and being able to go through that. We actually ended up typing in some of my answers and actually ended up going from there. YouTube game, we gotta get on it, and being able to go through that. For the people that just hopped in while I was actually going through this, I do appreciate you taking the time to be able to hear what we had to offer. But like always, plan your trade your plan. Everyone, y'all end up having a good one. Have a great weekend. Stay safe, and I'll see y'all in the classroom at a later date.